Let's talk more about the Bank of England Governor's warning that the government's flagship scheme to help home buyers has no place in the long run. I'm joined here in the studio by property expert Henry Pryor. Henry, good evening.
Good evening.
Do you agree it has no place in the long term?
I'm afraid I've been very sceptical ever since the Chancellor sat down after he made this announcement in the budget. And the Governor's remarks follow hot on the heels of the Treasury Select Committee, who also took something of a dim view of what was being conceived here. Remember, Help to Buy is broken down into two elements. There is the shared equity element that was launched from the 1st of April on new build houses. Where we have most concern and where the industry still has something of a question mark is what kicks in at Christmas time, which is the mortgage indemnity guarantee scheme, which mirrors perhaps a little too closely the North American scheme that perhaps got us in this trouble in the first place.
Supposed to be stimulating the economy, stimulating growth by encouraging people to move house, which has all sorts of other factors that go with it, people buying new things, but also stimulating house building. There are those that are saying it is already working.
It certainly is working, and we're seeing an increase already particularly in the frothier markets, in house prices. Frankly, if you give the 10 people who want to buy one of the 6 houses that is available for sale more money, then what they're going to do is spend more money on those 6 houses. None of these schemes, sadly, do anything about the national housing crisis, which requires more homes to be built. That's our big problem. And
it's taxpayers' money. The banks wouldn't gamble on people wanting to get on the property ladder, but the Chancellor is with taxpayers' money? Correct.
The Chancellor's playing big boy monopoly here with taxpayer as the bank, and that's what's giving us so much concern.
So, Henry, I mean, Mervyn King doesn't give a time frame on it, but what would you like to see as a time frame for these schemes winding up?
Well, the Chancellor and the coalition government, to be fair to them, have said this is a temporary measure. Yeah. It's going to be there for 3 years. The difficulty is that if you start serving more drinks for a longer period of time, at some point somebody has to take away the punch bowl, which was Mervyn King's famous phrase from the Mansion House speech 2 years ago. And that is what we had thought had been done after the great crash of 2008. We hope that the successive government in 3 years' time is going to remove this, but when they do, if they do, then we're bound to see that inflated property bubble burst.
Well, see it then. I mean, there are those that still argue that it is inflated already, that it is not realistic, the prices that are being sold at the moment. Are you one of those?
Well, house prices are a product of the availability of credit. Now, as you rightly say, lenders have been extremely reluctant to come forward with better terms. They think that they obviously see something of a question mark on the future direction of house prices. They're holding back. The government is artificially pushing them forward, both with this scheme and with funding for lending. All these are signs of people interfering in an otherwise open market. I'm afraid it stores up trouble for downstream. It's something that we're all going to have to keep an eye on.
Henry, thank you very much.